Oi, punters, I have found the best tax loophole. So it only works if you're rich and old. God damn it. Oi, while you're there, just hit the like button for me, will you? Oh, and the sub. Just click the sub as well. Yeah, cheers, punt. So I don't know if you've heard of this thing before, but it's called negative gearing. And when it's paired with the capital gains tax discount, it becomes the best tax loophole for rich people and old people to minimize their taxes. The media's been freaking out about this lately because Albo flirted just briefly with the idea that maybe he would touch these tax concessions. And you know it struck a nerve when the corporate media just freaks out about it and convince people that it's a bad idea to touch anything to do with this because it turns out the wealthiest Australians are the ones that benefit the most, you guessed it, from both these tax rules, which I'm just calling tax loopholes because they're just loopholes which you're legally allowed to jump through to minimize your tax. So what is negative gearing? Well, I made an Instagram reel about this. If you've seen it, skip it, but it's my best attempt at explaining boring tax policy to punters. First house, never done this before. Nervous. This will be my third house. Pay too much tax, so I need this to lower it. Oh wow! How do you do that? It's complicated. It is. Well, I earn about 200 grand a year, meant to pay 60 grand in tax, but instead, buy this hunk of crap property, negatively gear it, write off all the expenses, aggressively depreciate the value of the house itself, make a loss of about 10, 20, 30 grand on paper, take those losses off my 200 grand salary, so instead of paying 60 grand tax, maybe I pay 40, 30, I don't know, don't quote me on my numbers, my wealth management team sort that out for me, but that's, yeah. I knew you wouldn't get it. So hang on, you can either give your tax to the government or you could give your tax back to yourself in the shape of a house. Not really, but kinda. And the higher your income, the more tax dollars you get to use on buying houses. I don't know, that doesn't sound fair. Oh, buck up, mate. Anyone can do it. Just work hard, save, buy a hunk of crap like this. Oh, I mean, not this. You won't outbid me. So negative gearing is a way that people who have high salaries can take losses from their financial housing investments and take them off their personal salary. Normally when a business runs a loss, you can deduct those losses from your business expenses, but negative gearing allows you to carry over those losses from this business over here to your salary over here, which normally wouldn't really be allowed, but for some reason we allow it. So tax loopholes like this, concessions, cost taxpayers money, meaning there's certain people not paying taxes, and if the government needs more money, well, they're not getting taxes from this group of people, they might collect them from other groups of people, other punters, poorer punters, like you, perhaps me. But I really want to know, do we as society benefit from having a policy such as negative gearing? That's what I'm going to look at right now. So let's start here. Who benefits from negative gearing? Hint, not, probably not you. You or me, damn it. Okay, so according to Harry Chemi from Michael West Independent Medias, the Parliamentary Budget Office did a report, ran some numbers, crunched some nerdy stuff, and came up with a graph that's telling us who benefits the most from these tax concessions. And this graph shows that it is in fact the top 10% of income earners. These are people earning probably like 180, 200 grand a year. These are the punters that are getting the most amount of money sent to them, and there's less of them. And everyone below that gets not much. Okay, this is a trend that we see a lot in politics. The benefits of this sort of stuff always seems to flow to the top. Conspiracy or coincidence? So this green line is the negative gearing discount, but it's always paired with the capital gains tax discount. So this is where when you go to sell a house, you get a 50% discount on the gain that your house made. Money you earn from investing is taxed at half the rate as money earned from working. Now, do we think that's fair? Well, a better question might be asked, who makes most of their money from investing? That's right, it's rich people. Who earns most of their money from working? That's right, it's poor people. It's us. So does it seem fair that people that earn their money from investing get a 50% discount on their tax rate? I don't know. I don't think so. This video is brought to you by The punters who support me over on Patreon. I thought I'd take mid-video, mid-roll to say, hey, cheers punts, could not do it without you. If you like what I'm doing, head over there. Anyway, add over. Back to the video. Here's a report from the Australian Institute. This is like 5 years ago, and things seem to have gotten slightly worse since then. So the benefits of negative gearing laid out here, top 20% get 49% of the benefits. So yeah, some people get it, but just not as much as the top. And then we break it down to age, benefit of negative gearing by age. If you're over 40, 70%. If you're under 40, 29%. Obviously, you're older, you have more money, you can buy more investment. What that's done is cultivated an investor class. And in the real, that's what I was pointing out. When you go to bid on a house, if it's your first home owner, there are heaps of other people there, some people trying to buy houses as well, but there are some people there who are buying that house simply as a tax loophole vehicle. And so you're competing against them. And the catch is they are richer than you. So it's very difficult to outbid someone who is richer than you. And look at that. That's a piece of insight for you. Rich people have more money than you. Well done, Conrad. Excellent. 3/4 or 80% of capital gains tax discount benefits the top 10%. That's not you or me, probably. And more than 3/4 people age 50 and over. People under 40 receive only 6% of the capital gains tax discount, resulting in many young people who are locked out of the housing system, dominated by rich older people. And the housing industry is at pains to hide this, selling the long-standing lie that Australian landlords reducing their taxes are average earning mums and dads, while in reality, the beneficiaries of negative gearing are overwhelmingly wealthy. So this is the common trend with any tax loophole that only mega wealthy people are able to take advantage of. And the story often looks a little bit like this.
The top 10% of income earners receive almost 50% of the negative gearing benefit. Now that's going to make your blood boil a little bit, but check this out. The same data also showed more than 64% of investors that had a taxable income of less than $80,000 accounted for more than 60% of negatively geared properties. So what this is meaning is that yes, the top end, the top 10% of income earners, they're getting a lot of benefit, but all at the same time, the majority of property investors who negatively gear, like more than 60% of them, earn less than $80,000. So it's like, yes, there's some stinking rich people at the top that just taking the government for a ride, but the majority of people that are benefiting from negative geared property are actually in the same cohort as the ones who are complaining about negative gearing. It's these people making less than $80,000.
Okay, that's kind of a bit of a confusing way. It's like, what do you focus on? So if we come back to this graph here, I think what old mate Property Investor Boy is talking about is that these groups here, there's a big group of people who do utilize negative gearing and then get some benefit from it. But the emphasis that I want to put on this, so they're always going to spin the benefit being like, look how many people use it and get some benefit from it, whilst trying to distract you from the fact that 80% of the government spend on this tax cut is going to the top while throwing pennies at the bottom. And this is the trend with all the discussions around tax. The mega wealthy are going to try and convince we punters that, oh, you actually benefit too. And the thing is, they're not wrong. There are still some people in these cohorts that are getting like tiny little kind of benefits. And all you have to do is put up with the wealthiest Australians rorting your government and your tax dollars and getting 10x. So they give you $1 and then they give the mega rich person $9. And then they say, yeah, but you got $1. You're better off than you were before. That's pretty good. And so that brings me to the next thing. What do we get for it? Like, are these tax concessions a good way to spend taxpayers' money? Now, Pocock and Lambie point out that if we change these reforms, we could get up to $60 billion in the next 10 years. That's not nothing. And the Greens commissioned the Parliamentary Budget Office to look at all the tax breaks that property investors get and said that it's costing us over $165 billion over the next 10 years. So depending on which model we're going after, the takeaway from all of this is that we are spending right now a lot of taxpayer money to give that to property investors. And so the question is, are we getting good bang for buck for these tax loopholes that we've just established you and I don't really benefit that much from? Well, here's what research from the Grattan Institute has to say about this very topic. The interaction of capital gains tax discount and broad negative gearing rules have a peculiar effect on the housing in Australia. It encourages speculative investment in housing rather than in other forms of investment. Okay, so people, rather than investing in businesses, employing more people, upskilling themselves, they're taking their excess cash and they're putting it into housing. So there are probably better ways for people to invest their money other than housing, but the tax concessions make the housing more appealing than something else. Got it. If the policy objective is to boost housing, that's what they're always telling me. They're always saying, oh, but like we need the housing supply, so if we don't have tax concessions, then we won't have housing supply. Once again, how did we get here? We've had these tax concessions in for ages. So how do we get to where we are here, where we don't have enough houses and houses are really expensive and I can't bloody get one? So clearly that's just been a lie that we've been sold for so long. And they are an inefficient way of supporting the rental market, and they do little to support new housing development. Okay. Excellent work. I'm glad we've been doing the exact wrong thing for the last 25 years. Are we the only country to do it? Well, Australia's tax treatments of negative gearing is more generous than most comparable countries. In the US and the UK, rental properties cannot be deducted against unrelated wage or salary income. Great. In Canada, only cash expenses can... Okay, so we've got more rules than that. So we're far more generous than other countries. And Australia's taxes on capital gains is also, well, what do you know, more concessional than in many other OECD countries. So, right, if we modified negative gearing and the capital gains tax discount, would that do anything to help the housing market? Well, their modelling suggests that property prices might fall by 2%, right? So not much, hey, but not nothing, right? Not nothing. This is a minuscule effect when the prices have risen by 50% over the past 5 years. Wow. But these changes would help more renters to become homeowners. That sounds like a good thing, because they would be bidding against fewer investors at auctions. Back to my reel at the beginning. Who are you bidding against at auctions? And the proposal suggests that the home ownership rate would rise from 67% to 70%. So seems like marginal gains here. Seems like there's no loss. Seems like a massive waste of money that we're spending on it now. It's not helping houses get more affordable. If anything, if we get rid of it, according to the Grattan Institute, it's considered good tax reform. So yeah, why the bloody hell not tackle these two things? Oh, that's right. It's because the corporate media and the property investor class are doing everything they can to convince you and me that taking the few pennies that they throw to us with these tax concessions is worth them making absolute bank. So it looks to me like, yeah, some punters would lose, I guess, a little bit if they're utilizing some of these tax loopholes. But as a result, the government would get way more cash revenue, and then they'd probably stop hitting up your paycheck to come up with the shortfall that they inevitably face when they choose to hand out hundreds of billions of dollars to property investors. So yeah, tax loopholes, they never work for us. So let's bloody shut them down. For those bludgers. Let me know what you reckon. Fact checks welcome, citations necessary in the comments below. Massive thanks to we the punters over on Patreon. These are the punters that keep me making videos that I think are important, and not just the punters that get the clicks. I've got a podcast that comes out every single Wednesday. You can check it out everywhere you get your podcasts. Give the video a like, the channel a sub, and feel free to share this video with a punter who might not know just how scammed we're getting. I'll catch you in the next video. Cheers, punts.